All right, so is a heat wave necessarily good for utilities? Does that increase profits? Does it increase revenue? What does it do?
A little of everything. It's definitely really good for utilities because we're spending at record levels. Just to give you some numbers here, 5 years ago, I think the sector, so if I just use electric, gas, and water utilities, we're spending about 150 billion a year in CapEx. And in 2026, we're going to be up over 50%, spending close to $250 billion. So all this infrastructure upgrades, all of this CapEx, we want to show the regulators, we want to show the customers that it's worth it, and the grids never look better and stronger. So the heat wave is good that we're able to show off a little, that we're ready for it. Profits and everything else, it varies by state. Strangely, some states, if you think of like Exelon, ticker EXC, in Illinois, they're decoupled, meaning they don't make any additional money when it's very hot, and they don't lose or don't make as much when it's cold. Think about it's set up there for efficiency. So we love the heat waves. We love that they test the grid, and we love to show regulators that all this capital spending is worthwhile.
All right. You just mentioned Exelon. It sounds like it's one of your top picks. Are there some utilities that benefit more from the heat wave as opposed to others? So you're saying that one, they don't make more money if it's hot or cold. What about the ones that make more money when it's hot? Because we're about to go through a sustained heat wave.
Yeah, there are utilities that you do make more when it's hot, but just clearly it's beneficial. You do have a little offset where if you think about very hot weather, extreme weather, you do have companies rolling trucks and a little higher maintenance. So yes, like we think of utilities like WEC located in Wisconsin. I think the heat dome is really focused on the Mid-Atlantic and the Great Lakes states. So if you think of WEC Wisconsin, they're going to make more money with this heat. It's clearly beneficial to them. It does come with a little O&M, a little higher maintenance expense because they want to maintain this high system reliability. So we're happy to see that.
All right, so two of them that benefit from the heat wave, Exelon and WEC. I want to talk more about just more the longer term and second half story when it comes to utilities. Our colleague Pippa Stevens did a great story looking at data centers and some of the deals they're getting from states. Data centers are obviously big power users overall. When we're looking at the second half of the year, what's the outlook when it comes to utilities with also the thought, at least in the back of the mind, that we might get 2 rate cuts this year?
So yeah, it's never looked better. So I started this when I had hair maybe 20, 25 years ago, and the outlook for utilities has never looked better. As you said, Frank, this data center thematic finally give us load growth. We had, I think since 2010, 2011, we had flat to declining load growth. All of a sudden now you throw data centers in there, and on the national average, we're probably growing 2 to 3%. And there's some pockets we're growing high single digit, maybe even a little north of single digits. So the data center thematic is great. So that's fueling this load growth. That's fueling all this investment. As we always keep talking about, rate base drives earnings growth. And so the more they can invest in infrastructure, the more they can, and we love all of that. So that's the really nice thing. Now, you mentioned also rate cuts. As much as I want to push to you that we are growing earnings more than we ever have, probably average earnings growth is somewhere around 7%. If you think of the S&P 500, I think over the last 20, 30 years, it's grown earnings slightly less than 7%, but whatever. We're in line to S&P earnings growth, but yet we traded an 18% discount and we pay a much better dividend or a much better yield. You throw in there 2 rate cuts, Frank, and it's going to supercharge this sector with this dynamic that we have behind us. So we're really happy about utilities, the data centers, and potential rate cuts.
All right, Anthony, 2 things. Number 1, going ball works for you, so just keep it going, man. It's a good look for you. Number 2, with all this in mind, are utilities still a defensive sector? Is it still defensive with the fact that tech, which seems to be the ultimate growth sector, is really dependent on it, and we have some other structural tailwinds like hotter weather and just more use overall?
Frank, all of them, I'd love to bang the table and say we're no longer this, bond proxy, or we're no longer as defensive. But I think at the end of the day, we are. We're still viewed as this, although we have, again, better earnings growth. We have this data center thematic, all these things. I think we're still viewed as a defensive sector. And I think all of us in the, if we use the term utility mafia, are okay with it. When you saw earlier this year in January, where everyone was concerned about DeepSeek, our sector thrived, valuations thrived, and we really ran up. So as much as we don't want to say we're bond proxy, we still are. So we'll take it. We'll be fine with it. Everything's great about it, but our earnings growth, I don't know why more people don't invest in this sector, given we're trading at such a discount and we're giving this much earnings growth and paying a much better yield. We've never been as attractive as we are today.